So Elon Musk was back in the news recently due to a series of tweets where he basically predicted what our economy will look like in 2022 and in 2023. He was having a Twitter exchange with two individuals, and he basically said that in 2022 and by the latest 2023, the United States will be in a massive recession. So today I'm going to be reacting to these tweets and talk a little bit about why Elon Musk believes that we may be facing a recession in 2022 or in 2023. But before I break all of this down, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. So this Twitter exchange all started from a Twitter user who basically asked Elon Musk about all of the startups that have launched in 2022. The Twitter user says that there are 936 startups valued at more than $1 billion in the world today. And they asked Elon, what do we think this chart will look like in, say, 5 years? He said that if history is any guide, not many will make it past the next recession, which prompted another Twitter user to basically ask him when that will be. Elon, of course, wasted no time and said that predicting macroeconomics is challenging to say the least. My gut feel is maybe around spring or summer 2022, but not later than 2023. So basically, Elon Musk is saying that the United States is going to go from massive inflation and a pandemic right into a brand new recession. And the crazy part is, this isn't even something that's super crazy from Elon Musk. There are a ton of experts and investors that believe that the United States could hit a recession in 2022 or in 2023. And there are a few different reasons for this. So for one, we have massive inflation in our country right now. So the new CPI for December 2021 came out on January 12th, 2022, and it basically showed that for the entire year of 2021, inflation rose at a rate of around 7%. Now that is the highest we have seen since 1982. That's 40 years. But it also showed that wages weren't really increasing in the United States all that quickly. Inflation rose at a rate of around 0.5% month over month from November to December, but wages really only went up by around 0.1%. And real wages, which basically means what your money is actually valued at, went down by around 2.4% for the entire year of 2021. So we have this high inflation, which means prices in our economy are steadily rising, but the people in our economy aren't starting to make more. That is a big issue, because if people are spending a lot less money, then that means that there is a lot less money circulating throughout our economy, and our economy depends on all of that spending. It's what grows businesses, and it's what allows people to have more things. In a nutshell, that's basically how capitalism works. More money equals more growth, and more growth equals more jobs. However, if you take a lot of that money away, your economy starts shrinking, and if it does this for more than 2 quarters, you're in a recession. And this is exactly what happened back in March of 2020. Basically, the pandemic was first starting and businesses were closing down due to economic lockdowns and social distancing orders. Because of all of this, nobody was really sure if paychecks were going to be secured, and Americans didn't know if they were going to be able to put food on the table. Not only that, but they weren't going to be able to buy basic goods, and businesses were going to be losing money because of that. If people can't buy anything, businesses don't have any money either, and that means businesses can't hold on to the employees that they have. So you've got an entire economy that started to shrink, and we were in a recession in 2020. But don't worry, that recession didn't last long because of the Federal Reserve. Our federal government and the Federal Reserve saw that we were going to have all of these issues in the near future. So they decided to step in and print trillions of dollars in stimulus. That would give people access to money and would allow them to start spending a lot more to keep our economy going. And in the short term, it actually worked. This led us out of one of the shortest recessions that our country has ever seen. However, it created a lot of other issues. There was a lot of stimulus and a lot of reasons for Americans to spend in 2020 and 2021. You had direct checks to Americans. You also had extended unemployment benefits and the Paycheck Protection Program. And Americans were going to be saving a lot of money too, because the federal government decided to pause mandatory payments on rent and mortgages, and federal student loans. So we were saving more, we were getting a lot of free money, and that equaled to a lot of spending. But what they didn't foresee is that Americans were going out and spending in record numbers, and that led to supply chain issues. Now, supply chain issues were probably going to happen anyway, even if we didn't have all of that stimulus, because a lot of businesses were closed down during the early parts of the pandemic. I mean, you had some companies closed for several months in 2020 and in 2021. So businesses were just producing less, which meant consumers ultimately could buy less. Now, couple that with all of the stimulus, and you have a recipe for massive inflation. And the reason that inflation was so high is because businesses could only produce so much. Every single time they produced and stocked shelves, Americans were buying up all of that supply. Demand was through the roof because there was so much stimulus, and supply was through the floor because businesses had no workers, and on top of that, everybody was buying everything that they were producing, so eventually they got behind. And the way that our economy works is that when you have a demand for something, businesses and companies are supposed to fill that demand. So if a company starts making X amount of a product, if everybody's buying that product and they're running out constantly, that means a business needs to produce more. Businesses can produce more and hire more workers and open more factories and then deliver those goods to you. But as businesses start to do more and create more, they have to raise their prices because hiring more workers and creating more factories costs money, and eventually they're going to start trickling all of those costs down to you. And again, we didn't see this right away, but by the mid part and end of 2021 and how the beginning of 2022, we are starting to see all of the effects of money printing and our supply chain issues. That has led to massive inflation that is hitting new record highs. But there's one other issue here that we have to consider: our great resignation. So millions of Americans have been quitting their jobs voluntarily since the summer of 2021. And I mean, there is a whole slew of reasons why. Inflation is super high, and the wages that some employers are giving their employees is not nearly high enough for them to beat inflation and afford all of the things that they could before, so they quit their jobs. Also, some employers were definitely not treating their workers right during the pandemic. Even before the pandemic, some workers were being mistreated by their employers, so the pandemic kind of sparked them to quit their jobs entirely. And of course, you just had millions of Americans who were ready for a career change. The pandemic really sparked the idea that people wanted to put passion before a paycheck. They wanted to do something that they love and not just work at a typical 9-to-5 anymore. And of course, you had working from home and vaccine mandates, but the point here is that millions of Americans have been quitting their jobs for a variety of different reasons. That has led to a labor shortage that has only amplified our supply chain issues. And you're probably thinking to yourself, well, how can millions of Americans actually afford to quit their jobs and then job search for several months? Well, this all stems back to what happened during 2020 and the early parts of 2021. You see, there was so much stimulus and so much money in our economy that people were saving more. We actually had record saving rates in 2020, so people were putting money aside for emergencies and just the things that they wanted. And because of all of the money circulating in our economy, that meant that Americans were naturally getting wealthier. I mean, the Americans that were investing their money, we saw the stock market hit new record highs in 2020 and in 2021. This comes after the stock market essentially crashed in March of 2020. So Americans were taking advantage of the mortgage moratorium program and the pause on federal student loans. They were also saving a ton of money from direct checks that they were getting from the federal government. A lot of them had extra cash because of the gains from Wall Street. So this meant thousands of additional dollars that they could now use while they started searching for a new job. And that is exactly what we're starting to see right now. And of course, because of all of the stock market gains, that meant that people who were close to retirement could now retire maybe a few years earlier. So you also have some Americans who are retiring earlier. But whatever the situation is, there is a hole in our labor market. And eventually for workers, that money is going to run out. So if they don't find a job that actually pays them more, they're going to have to do one of two things. They can settle for any job that is available right now, or they can still just not get one and go even further into debt and use credit cards and use loans in order to pay all of their bills. That's a rough situation too, because now you have millions of Americans who are essentially unemployed and they have no money and are getting further into debt, and you have rising costs of everything in our country, and that in itself could create a recession. Less spending, more debt. So that's a situation that is ongoing. I mean, we don't exactly know when our labor market is going to reach an equilibrium. We also don't know when inflation is going to start dropping in the United States. However, the Federal Reserve is already starting to make monetary policies that could potentially lower inflation. However, some of these policies could also cause a recession. Like I mentioned, the Federal Reserve and the federal government enacted a lot of policies in order to get people to spend. Not only was there economic stimulus and pauses on mandatory payments, we also had the Federal Reserve drop their benchmark interest rates. Now, what this essentially means is that a lot more people have a lot more access to money. People can go out and get a loan and save hundreds of thousands of dollars on that loan because the interest rate is going to be so low. So in March and April of 2020, the Federal Reserve dropped their benchmark interest rates all the way to 0%. But now in January of 2022, they're talking about raising their interest rates again. Now, we don't know to what extent they're going to raise their interest rates this year. However, any interest rate hikes mean that more Americans are going to have fewer opportunities to get money. If interest rates continue to go up, then that means that it's going to be harder for some Americans to get a mortgage or a personal loan or an auto loan. Fewer people getting fewer money, then that means the auto and home markets are going to take a hit. In addition, banks are going to take a hit because they're not loaning as much money. And overall, there's going to be less money circulating throughout our economy and less money that the Federal Reserve needs to print. In itself and in a healthy economy, that's not really a problem. But our economy is very elevated right now, and Federal Reserve Chairman Jerome Powell believes that we need to bring that elevated level down to a normal level, levels like we saw back in 2019. One way they can do this is by dropping demand, and that means raising their benchmark interest rates, and they said that they're going to do this at least 3 times in 2022. But here's the issue and exactly what Elon Musk is talking about. Inflation is very high right now. Now, if our supply chain issues settle down, then inflation may start to decrease. You have a higher supply, and if the Federal Reserve starts raising their interest rates, then demand will start going down too. There's less money going around and less people have access to money. But if they start getting even more aggressive on inflation and raising rates even more, well, then even fewer people are going to get money until the number of people that can actually get a loan is near 0. If that were to happen, that could send us into a recession too, because now nobody is spending any money. Nobody's going out and financing anything. Nobody's getting a mortgage, and nobody is getting a new car. The only thing people are spending money on is things they absolutely need, and that could be a massive problem in our country. So here is the bottom line. Is the country going to be facing a recession in 2022 and in 2023? And the answer is, well, complicated. If I had a crystal ball, then I would tell you exactly what is going to happen in the future. But the fact is, I don't. And anybody that tells you that they know exactly what is going to happen in our economy is either trying to sell you something or lying to you. And honestly, I am no different here. I don't know exactly what's going to happen with our economy and inflation in 2022 or beyond. I can only look at the facts, figures, and numbers here. I know that the Federal Reserve and Jerome Powell have come out and said that they're willing to do whatever it takes in order to lower inflation. I also know that our supply chain issues can't last forever. I mean, look, eventually employers are going to hire people. They're either going to start raising wages or they're going to just start producing more somehow, and eventually our supply and demand will equal each other. The problem is I don't exactly know when that is is going to happen. I don't really know when inflation is going to drop due to demand or our supply chain issues. I do know that the Federal Reserve is going to have to do something in order to combat inflation, and they're going to raise interest rates in 2022. Now, how drastic they raise those interest rates will depend on how low inflation is and how low demand becomes. So for me, I'm not really too sure if we're going to see a recession over the next 2 years. I mean, even if we did start to see some factors and some elements come into play that could cause a recession, well, the Federal Reserve can just print their way out of it. Now, that might cause another recession in the future, but in 2022 and 2023, it might not happen. And I think eventually our economy is going to start shrinking again. It might not start shrinking all the way to where we see a recession, but it's definitely going to come down to a normal level. Now, it really just depends on how you measure this recession. If we measure a recession based on all of the growth numbers that we saw over the last 2 or 3 quarters, well, then it's possible. We might need to decrease in order to start getting back to that normal level. I mean, we've had GDP that has exploded over the last 2 quarters, but you have to remember this comes after GDP that was negative and caused by the pandemic. So keeping that all into perspective, yeah, it's definitely possible, but in my opinion, very much unlikely. And even if we do see it, it will probably be a very short recession and a recession that won't really feel like a recession. But enough about me. How do you feel about this issue? Do you think Elon Musk is right here and that we're going to be facing a recession in the United States in 2022 or in 2023? As always, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I will see you all in the next one.